With more than 6,000 small and microcap companies listed, if you're looking for the next Apple at the earliest stage, then Channel Check truly is the orchard. The listed companies support Channel Check, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for Channel Check so you're always up to date on what's going on at the small and microcap data place. Welcome to the C-Suite series presented by Channel Check and Noble Capital Markets. Noble is an SEC-registered FINRA-licensed broker-dealer and the source of the equity research available on Channel Check. Today's interview features enCore Energy, OTC ticker symbol ENCUF, TSX.V ticker symbol EU. Noble Senior Research Analyst Michael Heim interviews enCore Energy CEO Paul Goranson and Executive Chairman William Sheriff. Visit channelcheck.com or click the link in the description for Michael's research on enCore Energy, as well as news and advanced market data. And now, here's Michael, Paul, and William.
I want to take a second to thank everyone for joining us today. Today we have Bill Sheriff, Chairman of the Board of enCore Energy, and Paul Goranson, who's the CEO of the company, having joined just last fall. We're going to jump right into the questions, and Paul, I'm going to start with you. enCore's recently acquired uranium assets and has been very upfront about its desire to aggregate more assets under the belief that uranium prices will rise. Why do you see uranium prices rising from their current spot levels that are a little bit below $30 a pound?
Well, we're seeing a lot of things happening in the market today. Some of the more recent news that's come out is that actually producers are actually purchasing uranium that's going to create a tightness in the market. That should begin to drive prices as more demand approaches the market. We see the utilities have been stating publicly, as well as even in conversations directly with our company, that even though they're pretty covered for now, starting in 2023, they're showing significant uncovered quantities that they need to start acquiring. And we have this fundamental basis in the market that supply is not at the same levels it needs to be to meet the future demand. When I talk about future demand, I'm looking more at that 2023 and beyond window, and as a result, we see that there's going to be sustained support for increased prices. We know that there are other producers that have stated they're going to be purchasing. That's Cameco and Kazatomprom, just to meet their sales agreements. Others are doing this as a means to have strategic inventories to either hedge or to de-risk future production opportunities. So we see everything building to improving pricing, and we see that help support our strategy, both from a production strategy as well as potential of continuing to aggregate assets as we move forward.
You mentioned the producers building up their inventory, and this morning another large U.S. producer, Energy Fuels, said the exact same thing. They kind of talked about the importance of building a natural reserve of uranium. Is that something that you think will kickstart things?
Yeah, it will. So there's a couple of things that are happening on that end. First of all, in the case of companies such as Energy Fuels, they already have a rather large inventory as working capital, and they've stated they've intended to add to that to better build their strategic reserve in their own place. And then also we've got the U.S. government that's looking to also acquire uranium sometime in early 2022, we expect. They've stated it'll start in fiscal year 2022. And right now that's scheduled to be about 75 million pounds of uranium. Not 75 million pounds, I correct that, please. That's $75 million worth of uranium. And at today's prices, that is about, 2.5 million pounds or so, maybe more, or actually, yeah. And so it's not going to be a big amount, but it's a continuous draw on demand and draw on inventories. And as we see less supply coming into the market, those who have inventories will be effectively the first movers when the market begins to become more demand-based rather than supply-based.
If prices do rise, do you think there will be a supply response? You talked about the inventories, but looking beyond that, are there new sources of supply that you think will open up?
There always is, but the real catch is, will it be in time? There's always significant lead times, and most of the new supply will be coming from new mines, and it always takes, regardless whether you're in an in-situ recovery or you're in conventional mining, there is a lead time that one has to go through to get production response. A good example, if one goes back to 2005 and 2006, when the prices really began to move, there wasn't a significant production response, particularly in the US or even in the Western world, simply because the projects were not in place to get kicked off, and most of them were not even capable of producing until well after the peak of the prices. Now, that doesn't count for what we saw coming out of Kazakhstan with Kazatomprom's government-supported building program. That was where the primary source of new production response was. But let's keep in mind is that even the Kazakhs have said that for what they see as a future expected demand over the next 10 years, there's going to have to be 2 more Kazakhstans that are going to have to come into production in order to meet that future demand. And so being able to ramp up and get to that point, it's going to be significant prices are going to increase significantly to incentivize new production. And that's the key, is that today's spot prices, are we seeing any new production come online? No. And all we've seen really is primary production being closed and decommissioned or being placed on indefinite standby, pending new prices. So obviously we're not at that price point to draw in new production, and most public companies are stating that they need prices well above $40 to $45 a pound to begin thinking about bringing on new production.
Bill, let me bring you into the conversation. So if we do see a rise in uranium prices, what makes enCore Energy, what makes them in a good position to react?
Well, I think the key to this really goes back to your last question. That's production and new production. And when we entered the market, we've been around for 10 years, but we've been more or less in hibernation until just actually the last 12 months or so. And once we could see the metrics changing from headwinds on the prices to tailwinds, and in fact, a real profound case for higher prices starting, in 2022, 2023, significantly higher than they are now. Then the first thing we did to venture into the renaissance of our company was to acquire 2 production plants. These are licensed, permitted plants. There are 11 of them in the country. We have 2 of them for in situ. Our focus is entirely on in situ, and to a large degree, that's because of the exact factors that you're talking about, is responsiveness to the market. The in situ does not take anywhere near the lead time of a conventional mining project in general, certainly not a sizable one. Permitting reclamation all considerably easier. It's something that in the States anyway, a lot of it depends on what state you're in, and Texas is certainly one of the 2 major states that you want to be in terms of responsive regulatory regime, getting things done in a timely manner. But clearly having those production assets puts us 4 or 5 years at least ahead of the curve in terms of if you were to decide to go out and build an ISL plant from scratch. Aside from the 30 or 40 million capex required, conceivably more depending on size, you've got a 5-year time lag of permitting. And the permitting is not without a cost, nor is the simple G&A of remaining in business that long and retaining shareholder interest. These are all problematic. So having those as a head start really puts us, at the starting line for the next big move in uranium. And it's a unique advantage and one that, coupled with the quicker responsiveness of the ISL in itself, positions us very well.
Paul, processing the uranium resources is an important part of the process. Explain the steps that enCore has taken to restart the processing plant it acquired at the end of last year.
Sure. First thing we're doing right now is we're going through a capital asset review of starting with Rosita, because that's the one that we see as the closest to being production capable. So we're currently sizing and making sure the equipment we have in place is going to work right now. The good news is good. And so we're moving forward. We expect to start executing sometime in the second quarter with beginning to do the actual construction work. We expect to get done within the next 12 months. And we think it's going to cost us to refurbish Rosita less than $1 million in less than 12 months to get that done. We're also doing some work to begin developing our well fields to get ready for production. We've started permitting for our exploration permits. We can actually start putting some drill rigs to work to do mineral assessments to improve from historic resources to 43101 compliant resources. Principally at our Butler Ranch property we brought in with the acquisition. We're also in the process of doing additional land acquisitions with known mineral resources so that they can also be provided feed into Rosita. We expect when we do begin to put in well fields, we expect that to add another $5 million of cost to get that into production readiness. And actually that would be to get it into commercial production, significantly lower, make it ready to begin to develop for production. But we hope to have all this done in place within the next 12 to 18 months so that we can be prepared for the next when the market tells us it's time. And we believe that what we're seeing, as I mentioned earlier, is that what we're seeing in the market based on what we're hearing from utilities and other sources is that our timing is going to be in good sync with what we see the market doing.
And then, Bill, you also have some uranium assets in New Mexico. If prices really take off, talk about the long-term plans for enCore.
Well, enCore's been built with basically a three-tier strategy in mind. That's short-term, mid-term, and long-term. We have a short-term, in hand with the two of 11 production plants in the country there in Texas, and efforts underway to modernize them, with Rosita being first, as Paul had talked about. That sees us through the first part. The midterm, we're still addressing, and hopefully we'll be able to fill in with mergers and acquisitions, which have been a mainstay of the group's history over the past, even going back through the last fuel cycle, back in the late 04 to 08 timeframe. But the real long-term value of the company is in New Mexico. And New Mexico, while it hasn't had much production of late or in the last fuel cycle, it historically is the richest and largest of all the uranium districts in the U.S. And we see that returning to its prominence over the course of the long term here, and we measure that in terms of 5 years plus. The big issue with it is simply that some of the mining that was done in the past during the 40s, 50s, and 60s was not done maybe to the highest of social standards and even environmental standards in some instances. So, this is something that we've had a pretty good track record in other companies dealing with Aboriginal issues and affected communities issues, and bringing all the stakeholders along with us where it makes sense for everybody. And that New Mexico will be no different for us. It isn't going to happen overnight. As I say, we're addressing a 5-year time frame to it. We think that that's a reasonable time, and a good portion of that will be education in terms of how in situ leaching is different, or in situ recovery is different than the conventional mining that most of the folks there are familiar with. Vastly environmentally superior, much quicker, et cetera, and doesn't carry the health concerns that some of the practices in the past did. And we've really evolved, dramatically since most of the mines in those earlier decades. In addition, we plan to provide, a bit more benefit to the community than a gazebo in the park and a few jobs, which has been the standard throughout time for mining companies. And we're going to really find ways to work with the community and actually build careers and some sweat equity in the projects so that they actually benefit from the projects. And we think that will change the tide and actually make us welcome in the communities and the industry welcome. And it's why we've got such a large endowment there. We've got over 100 million pounds of historic resources, including about 32 million 43101 at Crown Point. And I'd mention that those are about 2/3 permitted under NRC permits as we speak. But here again, we aren't trying to rush out and work on it, or even our Juan Tafoya Marquez deposit, which is on a Spanish land grant. which is probably the best title you can get in the U.S. in terms of mineral title. But we aren't trying to rush out and get it done. More, we're trying to establish that good fundamental base of support in the community before we attempt it. But the prize is certainly worth it. We think the fuel cycle that we're in now is going to be quite different than the last one. The last one was meteoric in its rise, but very short-lived. And we think this one's going to be a decade or more, perhaps the most stable environment for nuclear power that we've seen since its invention. And with that in mind, we don't need $100 plus prices. We need $50 to $100 range over the course of a decade or something, and you can really build significant shareholder equity through production, and that's exactly our goal. And why New Mexico is such a big part of the triad, if you will, short, medium, and long term.
So we've talked about bringing some of the Texas plants up and running. We've talked about maybe making acquisitions. We've talked about longer-term plans of developing New Mexico. These things all cost money. You've got a clean balance sheet to start with, but how do you see financing all these acquisitions, all this financial spending?
Thanks. I mean, that's a good point. And like I say, we do have a head start. We've got 20 million Canadian in the till at the moment. Obviously, we have some reclamation ongoing, which will release bond money to come back in, but that'll have to be replaced on other projects as we move into production. So it's a short-term cash flow gain, but the 20 million that's there is certainly not going to be the end, be all end all for the next growth cycle, but it should be, roughly enough to get us to that first level of production. Paul had mentioned $1 million refurb on the first plant, $5 million on the well field roughly. And then, of course, we'll be spending a few million here and there doing PEAs or upgrading other historical resources to standards. And ultimately, looking at the Kingsville plant and bringing it up. So clearly, there's no shortage of places to spend money, but not having to deal with that big capex on your first plant is a huge benefit for us. Not having to deal with the 5 years or thereabouts of permitting and carrying salaries and burn rates while you're getting to the starting line. These are really huge benefits for us. We are at the starting line. We're within 12 months of the starting line with a relatively low cash burn to get there. So a clear advantage there. When you look at M&A, which obviously we've talked a lot about both in this forum and others, it's a bit of a question mark because you don't know what exactly is going to develop there in terms of opportunity or in terms of resources within the companies that you might end up acquiring or merging with. May very well be a cash, a bit of a cash hoard on the side of the company you're taking, which would obviously benefit plans. May also be the other way around where you've got great assets and not much cash, so you would need to go out and raise some money to move those forward. But as being large shareholder in the company, we're pretty keen on not diluting the company, and anything we look to do will be accretive in terms of opportunity and near-term cash flow. So got a great start. Like I say, it's I don't think you can ever have quote enough money, but we've certainly got enough to take us past the start line.
Terrific. Well, it sounds like you're in a good position to take advantage of any rise in uranium prices. We just need those prices to start rising. Wanted to thank Bill Sheriff and Paul Goranson for participating in this.
Well, Mike, I learned a lot about uranium. I have a couple of questions. Management seen that the prospective rebound in uranium prices might last a while. In fact, they even said it could last decades, given the push for green energy and so forth. I was just wondering, what are your thoughts about uranium pricing, and does it look sustainable in terms of a recovery that could last many years, as management seems to think?
Always hard to predict where prices are going to go, but I do think there's a good chance this could be much more sustainable than past peaks. And the reason I say that is because we've gone through an extended period of low prices now, and we're seeing that the exploration companies are not spending the money they need to explore. We've talked to several of these smaller exploration companies, and they talk about needing a sustained period of in the $40 to $50 before they'll even start to do some drilling on properties. And there's about a 5 to 10 year lag between when they start drilling and when it can reach production. So yes, this could very well be a long extended upcycle.
And you touched on this, but the management team seems to think that they are very responsive to react to the demand very quickly. And how do you believe this company is responsive relative to its peers?
Well, the company touched on it a little bit, but they have control of a process called in situ recovery, which is basically they bleed chemicals down to recover. So we don't have to go through the lengthy open mining or underground mining. And that just gets things up and quicker. But it does require more processing. And they have control of 2 of, I believe he said, only 7 in situ processing plants. And those are in Texas, and they're already permitted. So, you know, when they say they can get one of those plants up and running in a year or 2, you know, I think they can. And that's in stark contrast to what some other companies can do.
And Mike, the management team here seems very knowledgeable. What are your thoughts about the ability of this management team to execute on this strategy?
Well, they're very open about their interest in aggregating assets, and they've done it before. Bill Sheriff put together a whole bunch of uranium companies back around 2009, right when we had the last peak, and sold it for $1.8 billion. So he certainly got the pedigree to be the one that is the aggregator, and the openness and the willingness to do it again this period. As I said, at the end, all we really need is for uranium prices to start going up.
And Mike, when is the best time to actually invest in a uranium company? I mean, do you think it's 6 to 12 months in advance to seeing prices start to rise, or is it the market kind of react to when prices start to rise? What are your thoughts about that?
Well, that's a very good question. Obviously, it's hard to predict when uranium prices might rise, but as the management pointed out, we're going through a period where the utilities are not locking in contracts, and the producers are not willing to sell at these type of prices. So I have a feeling when prices start to rise, they will rise quickly. What we see in the stock prices is a very quick reaction. Any hint that pricing is going up, and the stocks do really well. So it's been a period of head fakes, and eventually at one point it'll be a real rise in prices, and the head fakes won't be head fakes, they will be long-term shooting up in stock price. So when I think it's good to not try and play the game of trying to time when things go up, because they just move too quick. Think about this as we don't know when they're going to rise, but we expect them to rise by the next 12 to 24 months, and certainly it's time to get in those stocks before you see that.
Thank you for joining us for this C-Suite interview presentation brought to you by Channel Check. Visit our YouTube channel for more interview content, as well as virtual roadshows and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelcheck.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and micro-cap companies listed.